So yesterday we got to take a look at what the federal income tax withholding is. So yesterday we got to look at the infamous Circular E table, which gives you a pretty much the section or the percentages that you belong in. So yesterday we got to take a look at an example of how to apply either the Circular E using the percentage method. I'm going to go over it one more time so we can practice this again. So here's the steps in case you forget it, okay? So step number 1, we're going to determine the amount of total earned wages that this person has accumulated. So in this case, L is a single woman with 2 dependents, and she makes $15.25 an hour, and she worked a total of 45 hours this week. The payroll period is weekly. Okay, so we went ahead and calculated step 1, the total earned wages, which in this case was $686.25. So we took $15.25 and multiplied by 45. And now we get our total earned wages, which is going to be our gross wages, okay? Then step 2 is to determine the total amount of allowances that from the W-4 form, okay? And we're going to use that to look up the amount that's going to be utilized in the top part of the Circular E, which is the table number 6. Okay, so here, table number 6 allows us to let us recognize, well, how much does one withholding cost us? Or how much to deduct per withholding? And in this case, we look through the payment period, so we know that's going to be weekly, and we recognize that one withholding is $83, okay? So what we do now that we know that one withholding is $83, she's claiming both dependents. So in this case, we're going to multiply the 83 with 2, and we get a total of $166. Okay? So step 3 is we're going to deduct that from her wages, her gross earned wages, to get us a total of her to get her total taxable income that we're going to actually look into and actually tax it. So in this case, here we're going to look in the table of the Circular E and find the exact section where we know how much percentage to tax her at. So in this case, we have a grand total. So once we've solved that $686.25, subtract out that 166, we get a grand total of $520.25. This is the total amount of taxable income that we can tax. So now we're going to go ahead and look at our number here and utilize the Circular E table, which is going to be here, okay? Now there are a total of maybe 7 or 8 tables, depending on what pay period you are, whether you're daily, weekly, bi-weekly, semi-monthly, whatever payment weekly table you belong to, you're going to be looking through that one. So in this case, this is the one for weekly payroll periods, okay? And we know that she's single, right? She reported that her marital status is single. So we're going to be focusing on the right side of this entire table. We're going to go down to each section. So we're going to go from A, B, C, D, and E, right? So A, did she earn this much? So we know that she for surely made $225 for sure, because the amount is $520. Section B tells us, well, did she make over this amount? And in this case, the number is 73. Hold on. A is $263, and did she make more than $845? In this case, no, she only made 520. So she belongs in this little row right here. So with that being said, we're going to follow along, and C determines that we need to take out at least $19. That is what the government is going to charge us regardless of how much money we make. This is their amount that they're just going to take away from our paycheck first. Okay? And then anything in excess of those $19, anything in excess is going to be taxed at 12%. Okay? And with this number here, the $263, that's how much the government is going to allow you to keep. Okay? So we have C, E, and D. We have 19, 22, and $263. Okay. So with that being said, now that we know that that's the section that we belong to, this is where we're going to start calculating our total federal income tax withholdings. Okay. So first things first is we're going to take our amount of taxable income. Okay, and we see that, so we're going to take our $520.25. We're going to subtract the amount that the government has given us, okay, because this is the money that we get to keep. So we subtract this $263 to get us a grand total of $257.25, okay. We're going to take this number and we're going to multiply, because this is in excess of the money that we made over the amount that we get to keep. So this is called excess money. So with this excess money, we multiply it by the percentage, which we recognize was 12%. Okay? So once we do that, we take our $257.25, we multiply by 12% to give us a grand total of $30.87. Okay? And then lastly, we also have to tack on what the government is going to charge us regardless. They're going to take away from our paycheck regardless, which is the $19. We add those two together, we get a total of $49.87 worth of federal income tax withholdings. Okay? Fair enough? Easy enough? Okay? So this is having to do with a lot of work with just looking up the amounts in the table. However, you're given pretty much everything by just looking at the W-4 form that this person has given you. Now, let me remind you, this is looking at the W-4 form for 2019, right? The people still use this today, okay? So, looking on the W-4 form, we know that she's claiming a total of 2 withholdings or 2 allowances, and that's how we make our conclusion to calculate the total federal income tax withholdings. Okay. Now, we're going to be introducing you to the Federal Insurance Contribution Act. Before I move on, does anybody have any questions?
No, ma'am.
Nope.
Okay. So now we're going to go ahead and introduce you to the Federal Insurance Contribution Act, okay, which is also known as FICA. Yes, as FICA is relevant when we are, especially when we have employees, we need to make sure that we have the capability to pay into their Social Security, okay, as well as their Medicare. So we have, FICA is broken down into 2 little segments. Okay, one is called the Old Age Survivors and Disability Insurance, also known as OASDI, which is also known as Social Security. Okay, as of right now, it is currently going to be taxed at 6.2% of your total gross earnings. Okay, 6% is going to be contributed to the Social Security. Okay, right now you have a cap maximum of how much Social Security that can be collected. So the maximum amount is going to be $137,700. Okay, now with this being placed on here, this is what the government is going to charge you, apart from in case your company offers what is it, IRAs or 401k plans. This is a separate tax that is taken out of your paycheck to go towards society. Okay, so again, this is going to be what you pay in for society. It doesn't really mean that you're paying into your own Social Security, okay? But the cap mark for that is going to be $137,700. Now, of course, depending on how much earnings that you do, okay, this cap actually sometimes may never ever get reached unless you decide to claim more than 6.2%. But in this case, that's not what you need to do. And it's been 6.2% for the past 10 years. Okay? So, with that being said, the cap amount does actually change every year. So make sure that you know that this number, this $137,000, may change again in November when we have our new tax tables. Okay, so it's always good to know if you do plan on going into this kind of business where you're taxing people. It's good to know that you have to go to irs.gov because this number does change every year. Okay, so here's the example. L makes $15.25 per hour and works a total of 45 hours, which we establish as a total of $686.25, right? This 6.2% is going to be taxed at the gross earnings, okay? This is before federal or your withholdings come into play. So with that being said, we're taking the total amount that she's earned. We're going to multiply it by 6.22% to get us a grand total of $42.55 that is contributing to her old age survivors and disability insurance, also known as Social Security, okay? Then on the other part of your FICA is going to be the hospital insurance, HI, which is also known as your Medicare, all right? So again, this isn't contributing to your own, this is contributing to society. Okay, so with that being said, you are going to be taxed at 1.45%. Okay, and in this case, you can work as long as you want, and the Medicare will always be taken out of your paycheck with no limits. So this is actually a very good benefit because at the end of the day, Medicare is very important to have. Okay, so there is absolutely no limit to how much you can actually contribute to the Medicare itself. Okay, so again, here's the example. L makes $15.25 and works a total of 45 hours. So in this case, we're taking the $686.25 and we're multiplying it by 1.45% to give us a grand total of $9.95. Okay? Now we're going to total all of those up into the journal to actually calculate how much actual money is L actually going to take away at the end of the day, right? So all of these numbers that we've calculated, all these taxes are coming out from her paycheck, from the total gross earnings that she's earned from the company. So she earned a total of $686.25, right? That's the total salaries and wages expense. However, we need to, one, we've already calculated the federal income tax withholdings, which was $49.87. We also need to calculate the FICA tax, which right here is $42.55 for the Social Security. And then Medicare was $9.95. So out of all of this money that she's earned, she's walking away with $587.88. So with her pay rate and her weekly payroll, she's averaging out $100 per paycheck to all of these federal taxes. Okay, and that's usually, this is the baseline typical things that you will be taking out from your paycheck as an employee. Okay, this is all I want you to know for now. Again, it's just depending on your company. Do you offer these extra deductions? Do you offer a 401k plan? All of those are going to be just more deductions that's going to be taken out of your gross pay to get you to your net pay. So of course, with all of those benefits and all of those deductions, of course you can assume that everything's just going to keep shrinking and shrinking and shrinking, and your actual paycheck that you're going to be receiving is actually going to be a lot smaller. Okay? So any questions in regards to how to calculate the baseline taxes for having employees? I mean, for taking it out of the employee's check. The next portion that we're going to talk about is how much it's going to cost us on the taxes that we have to pay for having employees. So this section, does anybody have any questions in regards to how we tax a person's paycheck?
No.
I have a question.
Yes, go ahead.
Based from the calculation prior to this taxes like that, how the 166?
166.
Yeah, when we were calculating the 4 steps.
Right here.
Yeah, that is not deductible, or because I'm looking at the last presentation you did. I thought 166 will also be deducted there.
No, no, because that's just the money that you're claiming to keep. Okay, so that's not deductible to your gross, no. Not in this case. Okay, and yeah. And then on top of that, the federal government is going to want to take the maximum amount of money from you. So that's why it's deducted from your gross pay instead of your net pay. Okay, so that's why we need to be able to calculate it directly from straight right out of your actual gross earnings. So and of course, if you think about it, especially for Social Security, I know we don't pay into it, but if Social Security or if FICA, right, does exist in the future, right, you want to make sure that whoever is contributing to this pot of money, you want to make sure that they contribute the same amount as what you've contributed before. Okay? So, again, it's just going to be based on the total amount of earnings. And of course, the more earnings that you make, the higher the Social Security that you're actually putting into. Okay? Same thing with your Medicare. Here, we've only calculated a total of $9.95 for Medicare per paycheck. That's not that much. Okay? So, again, it's not deductible to your gross pay. Okay? Nothing is going to be deductible. It's going to be based on the total earnings that you've made. Any other questions?
I get it. Thank you.
Okay. Okay. So now that's just dealing with just the employee's standpoint. Okay. So that's how you take away everything that needs to be taken away from their paycheck. Okay. Now we need to also calculate our portion for having these employees work for us. So we have what's called company FICA and our company taxes that we have to entail. So company FICA, again, is going to be us matching 100% of what the employee contributes, right? If the employee contributes 6.2%, you have to match them 100%, okay? So with that, we also have to deal with company FICA. So again, we're going to continue using that same exact example. So we're going to continue. We're going to calculate L's taxes, or our taxes for having L as an employee. So we're going to match them 100% in the exact FICA contribution that they have done for or contributed to from their paycheck. So in this case, what are we going to do is we're going to gather up the total, which is going to be the 6.2% plus the 1.45%, right? We don't need to separate them. We're going to add them together so we get one total number. So in this case, the total percentage is going to be 7.65%, okay? And again, with this same exact scenario, she made a total of $686.25. So we are going to either multiply that to get us a grand total of $52.50. So again, we calculated earlier, Social Security was $42.55. The Medicare was for $9.95. We add those two together to get a total amount of $52.50. Okay? And when we journalize, we just journalize it together. You can separate them. It's just going to take up some more journal space, and the best way to just have it there, because we know we have to do right to our employees. If they contributed to it, we also have to contribute to it. So what we can do is we could just place it all in one area, because we know either way, at the end of the day, it's all going to go into one federal agency, right? It's all going to go to one agency to pay the employer's portion and to also pay the company's portion, okay? So here we know that company FICA is going to be $52.50, okay? Next section that we have to, that's very, very important, is we also need to pay for the federal unemployment tax as well as the state unemployment tax, also known as FUTA and SUTA, okay? Now, I don't know, this is kind of a touchy topic, but a lot of people think they put their money into their own federal unemployment tax. No, that is absolutely not true. You do not put any money into your own federal unemployment tax, okay? Because that is not something that is taken out of your paycheck. The company is responsible to place the money in for you, for having you as an employee, okay? So, with that being said, I know that a lot of people, they get angry because it's like, hey, I got unemployed. This money is mine. It's what I've contributed to society. That's not true. It's what your employer is supposed to contribute for having you as an employee. Whether they have you as an employee or someone else as an employee, they're responsible for contributing to that. Okay? So, with that being said, again, you do not put your own money into it. The company does. Okay? So So this is the Federal Unemployment Tax Act. Okay, so with that, employers are required to pay FUTA for having the employees. Okay, usually it's based on the first $7,000 paid to the employees, but in this case, the number can range depending on how many employees a company has, as well as it can also range based on how much money they actually owe. Okay, so if they owe, let's say, for example, Walmart, if they owe billions of dollars because they have so many employees, you bet that this percentage is going to be super high. Okay, but in this case, the maximum that they can do is 6%. The minimum that they can have is anywhere from 0.5%. But for the sake of this class, I am actually going to make it simple and easy for you. We'll just apply 6% for FUTA, and we're going to apply, and yeah, that's it. Okay, so I just want you to recognize that FUTA is just 6%. Done. Okay? Because again, it's going to be depending on what company that you work for, how many people are involved, and how much the company actually owes. Okay? So with that being said, companies must deposit FUTA, okay, using their Form 940. Okay, so that's their separate tax that they have to file with the IRS for having these employees. Okay? And FUTA's tax are deposited on either whenever you schedule it for. Okay, so oftentimes FUTA, right, it can be the same as an accounting period. It could be done at the end of the month. It could be done every 3 months, just depending on how big your company is. For a major corporation such as Walmart, they have to pay every week. Okay, so we'll talk really briefly on how that works. Again, it's going to be based on when you fill out your 940 form. So a lot of companies, what they do is they, every time they process their paycheck, they scheduled it the week after to submit their taxes. But there's also for other companies that could also hold off to it till the end of the month to pay it all off. But then again, that is also a scary, risky business because ultimately you're owing the government money. If you do not pay, they will come after you. They'll fine you, and it's not a very pretty price to be fined. Okay? And again, this money, right, is a lot of the reasons why a lot of employees or former employees get angry because the company's not willing to reprimand the employee for their unemployment because they failed to pay. So, little side note there. Okay? And then state unemployment tax. Now, every state is going to have their own and individual state unemployment tax. In the state of Nevada, it's called state unemployment insurance, known as SUI. Okay, but for most states, it's going to be also it's pretty straightforward. It's going to be the state unemployment, and again, it depends on each state and what their percentage is. Okay. And here they can collect anywhere up to $31,000. Okay. Now, it's also going to be based on a rate number as well. Okay. It could be anywhere from 0.25% to 5.4%. Okay. And most new businesses are automatically going to be taxed at 3%. So for this class, to make it very simple and easy, we're just going to go ahead and use 3%. So you have FUTA with 6%, SUTA with 3%. Okay, because most businesses, new businesses, especially if you plan on opening your business, do your research, figure out what your state unemployment tax is, but in this case, it is going to start us right off at 3%. Okay, and this number can also change, so make sure you go ahead and look up your state's information on their taxes. So I gathered this from the Nevada State Unemployment or also DETR, okay, to find this information online, okay. And then again, so that's what we're going to be dealing with for class. So let's go ahead and calculate. The last thing that we're going to be looking at as far as any payroll taxes or other contributions that we need to incur as far as our side for having employees is if we're going to also make sure that workers' comp is definitely there. Anything else that we compensate, such as holiday pay, vacation pay, sick pay, insurance, obviously, right? If the employee contributes 50% to their insurance, we either match them 100% or we actually pay for their Medicare their insurance, right? Same thing with the retirement benefits. Any profit shares as well, okay? So again, all this list right here are extra benefits and extra deductions that we also have to pay because this is what we offer our employees. Now, again, that's going to be this is going to be based on what company that you work for and even if they even offer these to these employees. But for this class, I'm only going to focus on one because we're going to start off as a new business. You're more likely not going to be able to afford any of these extra benefits for your employees because you need to establish yourself as a business before paying out all the money to your employees. Okay, so the number one thing we're going to be focusing on is going to be workers' compensation. Okay, again, for workers' compensation, right, is going to be the employer's way to keep themselves out of trouble, okay? So what does that mean? If an employee decides to file a claim against us, this is what this extra money is intended for, right? This is money for companies to protect themselves when they do get into those kind of lawsuits, all right? A lot of times employees get injured on the job and they sue the company for that. So this is basically a safety net for the company to have to prepare for that section for in case the claim does go through and the company has to end up paying for those employees, for former employees, medical bills, right? And then this is where a lot of times for those kind of companies, this is why some of you guys who come from workers' comp have the money for the training. It's because the companies, they planned ahead of time in case you do get injured on the job, that they have a plan for you by paying you to get the training you need so you can go get another job, all right? So this is going to be 1.36% of your gross earned pay, okay? So let's go ahead and calculate all of the necessary taxes that the company must pay for having the employee. Okay, so again, we're using L, who worked a grand total. Her gross earnings was $686.25. Okay, and we need to look at 4 different taxes that we need to pay for having her as an employee. So number 1 is the FICA, which we just talked about, right? Whatever that the employee has contributed, you must match them 100%. So in this case, we're going to multiply it by 7.65% to get a grand total of $52.50. Okay. FUTA, again, for this class, we're using 6%. So we're going to multiply the gross earnings by 6% to get us a grand total of $41.18. Okay. SUTA, again, is going to be 3%, which is going to give us a grand total of $20.59. Okay. And then lastly, workers' compensation is going to give us, it's 1.36%, which is going to give us a grand total of $9.33. Okay. So how we journalize this is we're going to recognize that we have payroll tax expense. Okay. We're going to contribute that. We're going to make all of these things that we owe to the government. Okay. We need to, and we're going to separate them by their account names, which is again, you could do either company FICA payable. You got FUTA payable, SUTA payable, and workers' compensation payable. Okay. So here are my listed items, and here are my listed amounts to give me a grand total of $123.60. So think about it twice when actually having employees, okay? Because not only did L got to take away $586, you have to pay them, or not them, you have to pay $123 for having L work at your company. So, and don't forget, you also have to take away the amount, also add the amount of taxes that the employee is supposed to pay, right? You're supposed to pay them, but because they're asking you to pay for them, and we already know that it already cost us a total of $800, roughly $800, right? Because she made $686 plus this extra $123 that we have to pay for having them as an employee. So you can expect, it's also very common, employees are very expensive. And this is why most companies decide to opt out that choice and hire independent contractors or 1099 workers, and then they just pay them as an expense, than having to deal with having to cover everybody for all of these expenses. Okay? Any questions in regards to how much we have to pay for taxes or how to calculate the taxes for having employees?
And so far, just a matter of more practices,
Mm-hmm.
calculations.
Mm-hmm. Okay.
Just giving us some cases like that.
Now, oh, sorry. This is just looking at one employee. Imagine you have to do this for a set of 20 employees. You have to do this, and every individual person is going to have a different amount. So think about this. You have to be calculating 20 times, and every single one's going to be different. So this is why a lot of companies decides to pay the big bucks to those smaller companies that can do it for you, because this ultimately is going to take a long time, especially depending on the payroll period that you're doing, right? So if you're doing it every week, you can only imagine every 3 days you need to calculate all of this information, okay? So again, payroll is complicated, especially depending on what method that you use, which we only learned for percentage method. And it's going to be also based on their W-4 form that they submit to you. Okay? Again, this is looking at the 2019 version. Okay? And yes, and this is how you calculate payroll by hand. All right. So with that being said, how are federal taxes paid? Again, all this information is going to be based on your 940 form if you're the employer. All right. And again, your responsibility is to make sure that the employee gets a W-2 form, right? So they can file their personal taxes. It says on there as well that you're supposed to make sure that you recognize the total amount of your contributions, the taxes that you pay. Make sure that you keep a good record of it, especially when you submit it every in the beginning of the year for your annual taxes. Okay, so again, it's scheduled based on how much money that you owe, how many employees you have, and especially how large your company is. Okay, a lot of smaller businesses are more likely to get away with either monthly payments or even quarterly payments. Okay, they don't need to pay as often as they do, right? Versus a major corporation, right? And again, it's just thinking about which company can you get the money the quickest, and especially with corporations, they're looking at trillions even of money that the government can instantly take. Okay. So usually on the form, it does tell you that it is due on January 31st, but then again, it's just really depending on the on when you register to the IRS and you register your company towards there. It's just dependent on you filing with your tax accountant, or if you have an actual person that does it for you instead of hiring a tax accountant. It's just going to be dependent on that. Okay, and how you schedule it will be depending on how often you want to schedule it. Okay. And usually all of this, especially for the federal income taxes, right? This was going to be different than from your actual unemployment. So unemployment, you can actually make annual payments. And that's why, yes, you have that option and capability to do it. This is all going to be clearly written in, obviously, your IRS form. It will give you a description on exactly when it's due, how much is due, and when is it, how much you have to actually pay. So again, all those documents, legal documents, can be found at irs.gov. Okay, but again, I'm only showing you what it's like to have to calculate by hand when you actually have employees. Okay, as far as you being responsible for making these payments will be dependent on if that's your criteria of your job. If you are human resources, then you need to know this. And again, your best bet is to go to the government itself, or go to irs.gov, talk to a professional there, or go seek a professional, one of the big four companies that does taxation. Go to one of them and pay them the big bucks to be able to, for them to properly file the taxes for you. Okay. Course chapter review. Again, we looked at what payroll is. We looked at two different types of employees that are going to be on the payroll. Okay, and all the other four employees are going to be considered expenses, right? We looked at what the forms that you are needed to have, especially when you're starting a business and especially when you want to have employees. Okay, so here I've also provided the link for, or not provided the link, but it's going to be irs.gov. Publication 15. That's all about employees and payroll. Okay. And then things that we need to look at is what happens when we're looking at our employees' payroll. I only taught you a couple taxes, right? We're going to be only looking at income tax. The income, the federal income tax withholdings, and then FICA. And then here I broke it down to what each one does. So again, federal income tax, we're going to be using the percentage method, which takes us straight to the circular E, which is going to be based on the table, which is about how much income they earn. All right. Then of course with FICA, we already know it's split into two. Okay. Social Security or Medicare, right? It's 6.2%. You need to know that Social Security has a cap of 137,000, and Medicare is 1.45%, and there's no limit. Okay. Then we're looking at the employer side, which we're dealing with FICA tax, FUTA, SUTA, and workers' comp. So again, FUTA, for this class, we're only learning that it's 6%. SUTA is going to be 3%, and workers' comp is going to be 1.36%. Okay. And here is an example on how to actually do the percentage method, which we just learned, and how to calculate to get your total federal income tax withholdings. Right. Lastly, this is how you journalize when you're making your payments to your employee, and this is what we're going to be looking at when we're doing our taxes for the employer. Okay. Any questions in regards to Chapter 12, payroll?